Let's get some perspective on the forces driving this market right now as we kick off a new quarter. Joining us right now, Mish Schneider, Chief Strategist, marketgauge.com. Mish Schneider, are things starting to say risk on? In fact, today in a down market, the mega caps are all higher. What are you watching?
Well, it's so interesting, Nicole, because we have so many things we can look at right now and make a pro and a con for it. So let's start with the risk factors since you brought them up. What we love to do here is look at the ratios, not just what these instruments are doing in and of themselves, but how they're doing relative to something else. So if we just look at bonds, obviously big topic of conversation, and we look at the junk bonds or the high yield, high debt bonds, we determine risk on, risk neutral, or risk off on how they are performing relative to the long bonds. And right now, they have actually been outperforming all along, really since April. They have never underperformed the long bonds. We consider that a risk-on characteristic. The same thing with long bonds versus the SPY. We want the SPY to outperform the long bonds, and they are as well. So we can say risk-on from that perspective. But for how long, when we see today the junk bonds actually took quite a tumble, the S&P is not really doing very, very well. So the risk on can be somewhat skewed right here when you look at the individual instruments as opposed to just the ratios. But it's certainly preventing us from getting too negative, but I can't say we're so overly positive at this moment in time.
Right. I mean, for someone who has a long time to go, I mean, not someone who has a retirement portfolio, but for a young person, would you say there are buying opportunities right now? What would you recommend to somebody who has some time to wait, for example?
Well, again, the pro and the con, right? So October, I've heard all the conversations about the seasonality in the election year and Q4, and then going into that in 2024 is going to be really super bullish. And that would, of course, then incite people to maybe buy some. But we also have seen October's be really disastrous, and we have some real problems. So I would say for the young person right now, as we're talking, beginning of October, really watch what's happening in what we consider the inside sectors of the market, the small caps, the retail, and the transportation. And even though we saw a nice flip up, look like it possibly bottoming in the retail sector, they're off a little bit today, and the whole area of the inside sectors are so underperforming. That can be a drag on the growth stocks. So I would look for another whoosh lower before I would really start to make long-term investments if I were younger.
Yeah. I think for the folks who love technical analysis, I see some notes that you have about the McClellan oscillator, and I just throw it out there for the folks who follow that kind of stuff.
Well, basically, it measures oversold, overbought, and when the McClellan gets a little too extended on either way, generally we get some kind of a correction. And so last week, the McClellan oscillator got really oversold, and so we saw that bit of a bounce. What was so interesting is that one would have expected the bounce to continue today after the announcement yesterday that they came to an agreement with the government, but it didn't. And so, again, the relationships that are so historical have to be questioned. And it might be a good time to re-examine also the 70s here, because inflation, another big topic, which really came down from 74 to 76, from 15% to 2%. Everybody thought, oh, inflation is beat. Once we got any kind of policy mishap, plus other factors like strikes and weather and geopolitics, we saw that go from 2% to 19% in 1980. And I'm not so convinced we won't see another round of inflation going forward.
Right, and that's the whole thing. Names like Tesla got those deliveries, but there's still some optimism. NVIDIA has run up, but you still heard Goldman Sachs put on the conviction buy list, Meta, some of these mega cap tech. Your thoughts on some opportunities there? Even Coinbase is a name you're watching, right?
Yes, well, Coinbase is definitely right now trying to establish a trading range between like 70 and 80. It was above 80, broke it. And I think there's some fundamentals to watch there, but I'd like to see it prove a little bit more. As far as Tesla, Meta, NVIDIA, those stocks gave you so many great opportunities in the beginning of the year. I'm not sure I would be so active in terms of adding to them, but clearly the growth stocks that just prove themselves over and over. But remember, that ratio between growth and small caps gets too wide, and we start to see the growth come down. So I'm looking, Tesla maybe held 240 today. I'd like to see more proof of that. NVIDIA held 400. I think that was a good sign. Meta 300 roundabout. But you got to be kind of fast if they start to fail along with the rest of the market.
Right, understood. I mean, where do you think when we mentioned something like Coinbase, and we're seeing Bitcoin higher today, you got at least one win today overseas, and that's helping Coinbase move higher. You have an Ethereum ETF that launched today. You have the spot ETFs for Bitcoin that are under some scrutiny by the SEC, but in October is when we're going to hear more from the SEC, which is now. Is that something you would think every portfolio should have something like that?
Well, what's so interesting about Bitcoin is that it actually did well in September. And statistically, when it does well in September, it goes on to do well for Q4. And so there's a target right now that we have at about 31.5 before we reevaluate. And interestingly enough, it so outperforms some of the other cryptocurrencies. We've been in Chainlink. Solana looks like it could potentially be ripe here. So I think this would be a good opportunity to take a look. And those who actually have been doing dollar down averaging have done well in that space. So yeah, we're kind of friendly to that right now, and especially looking forward. And it's decoupling a little bit from the market.
Right. Mish, you had so many great notes, and I can't possibly hit everything that you had on here. But is there anything that I left out that you do want to add?
I think the biggest thing to add right now is if you really want to look at anywhere, to me, I'm still convinced about commodities. So I like to look at DBA and DBC. They cover the breadth of it. They have outperformed everything, even with this correction. Commodities correct, that's their nature. And I think if we see any downturn in the dollar and in interest rates, while people may think that's such great news for equities, I think it's better news for commodities. So I'm still in that camp until proven otherwise.
Yeah. Good to see you, Mish Schneider, marketgauge.com. Thank you so much.